Welcome, Hesham, Robo. We're starting off this unnamed series yet, though. By the time this will go live, it'll have a name. We've been riffing on it. It'll be a secret even for us now recording this. But we're very excited. We're just taking some time today to meet with Hesham, Elys co-founder, and together with Robo and the Stride team and ICL, we're starting to dive a little bit deeper into the products that make up the Cosmos and this new ecosystem we're building close to the hub and around Atom as well. And this is the first taste of it. Robo, thank you for joining. How are you doing, man?
Yeah, doing great. Happy to be here. Really looking forward to this, and couldn't ask for like a better first guest than Hesham and the Elys team.
Yeah, we have even Maxime on the back of the screen, just pulling the commands. How are you doing, Hesham?
Very well, thank you. Appreciate you having me on, Nico, and it's great to be on with you, Robo, as well. Excited to talk about Elys, excited to talk about Stride. It's going to be a fun one.
Yeah, Joe, I'm going to pull you in a different direction for the start, as always, because most folks don't know that you're like dual welding. You're by day flying planes and by night building protocols. Could you give a little intro of what you're up to, just in your regular life, and then building Elys?
Yeah, I'm actually in Calgary right now on a layover with my airline. So you're absolutely right. Doing multiple jobs, but things that I absolutely love to do. So kind of going back to like my classical training, so to speak. I'm a U.S. Air Force Academy graduate. After I majored in operations research. After I graduated, I became trained as a pilot, starting off flying KC-10 tankers in the Air Force. And then switched over to the C-17 Globemaster, which is a medium to long-range strategic airlifter. I've actually been doing that for the last 20 years, which is pretty exciting. But I transitioned from active duty Air Force to the reserves, and then I started flying with the airlines. Throughout that process, I decided to go back to school, and I got my Master's of Business Administration from the Arizona State University, WP Carey School of Business. And I got more excited into the entrepreneurial side of things, more excited about, kind of seeing what's out there in the business world. And so crypto really like caught my attention in terms of what could be built. And so in 2017, I started to become very interested, kind of getting connected with people who were, building in the space, had these visions about what was going to happen. And I quickly saw, that there was a lot of potential, especially when it came to DeFi, in growing a really, really like massive industry. So I got connected with some really great guys, and got connected with our co-founders, and have essentially just been super excited about what the opportunities are. Initially got very excited about Cosmos itself because of the customization and some of the things we could talk about later, like what can be built there. And so this is where we ended up. So yep, now I'm flying for a major US airline and also a co-founder of Elys Network. And it's interesting how the journey took place, but here we are today.
It is super cool. I think we've been chatting a lot with, Robo and other folks in the ecosystem, that we have such a crazy varied like set of backgrounds, from, even from music to engineers, from again pilot to driving up a DeFi business. It's quite a stint. It's crazy.
Yeah, it's a lot of fun, and I love that. That's actually what makes this industry so great, is people bring different skill sets from wherever their backgrounds were, and they put them all together, and we have a fully functioning, economy, so to speak. And that's exactly how it should look. So I love that. I love that we're not just all homogenous, that everybody comes in with a different perspective, a different idea. We reach consensus on how we want to go forward, and we back each other, and that's the beauty of it. So I love that. It's actually one of my favorite things about building in this space.
If you were to throw a really quick shout out to somebody in Cosmos, who welcomed you here, who opened the door and said like, "Hey, Hesham, welcome to Cosmos. Here's the cookies, here's the milk, here's how you build a chain."
It was actually a coworker of mine from 5 years ago who said, "Hey, you gotta check out Cosmos. This is a really interesting concept." Back then they were using the term very heavily, Internet of Blockchains. And so I went and read about it, and it really clicked for me. It really made a whole lot of sense as compared to Ethereum, right? Because I think really the center stage was Ethereum. Everybody was talking about that at the time. Once they had kind of moved from the money concept of Bitcoin to the software concept of Ethereum. And so I saw this as a real like next step on, okay, how do you go from like what Ethereum is trying to do into scalability, into customization, into like a really fully operational, so to speak, ecosystem. So yeah, so as a coworker of mine, shout out to you and cheers to you, because I think it's gonna be a great ride going forward over the next 5-10 years.
That's amazing to hear, man. Let's maybe shift into Elys, and why we're here as well to chat all this. Bro, that got you here. If we have new listeners here, maybe do you want to give us the elevator pitch? What's Elys? What's the roadmap right now that you're focused on? How you guys been going through phase 1 and phase 2 that are right now top of mind?
Yeah, absolutely. So Elys Network is trying to be really the first entry point for a user who's trying to break free from a centralized exchange. So when you look at the current opportunity that's out there, you have something like 300 million centralized exchange users, but only about 10 million DeFi users. So there's a real asymmetry there, but that's not a problem. It's an opportunity. So with Elys Network, we see that as a way to allow users to come over from those centralized exchanges and kind of not replicate the experience, but improve the experience for them to do the things that they're comfortable doing on a centralized exchange, but with the security of their own self custody, right, and the comfort of that, and having all the advantages that come with that. So with that said, that means everything that you can do on a centralized exchange, Elys will offer it. So that's swaps, that's staking, perpetual trading. We have vaults that we can talk about. We'll have, in the future, real world assets. We'll have tokenized assets that could be stocks or bonds or anything else like that. And then we'll have, essentially a connection to just about every chain. So that will give people the freedom to go to and from wherever they want, trade whatever they want. And one of the things that we're really excited about too is actually launching a prediction market as well. So we'll have a prediction markets trading, which I think is going to be really exciting, really fun for a lot of people. And I know that's one thing that has gained popularity recently. And so we're trying to really do that all in one umbrella. And most importantly, we want to also help our friends in the DeFi space, within Cosmos. So we don't view ourselves as a competitor to, let's say, Osmosis, Stride, Neutron, et cetera. We view ourselves as partners. So as we grow and bring users into the space, it'll allow them to actually jump off and move into those other platforms and vice versa. So those other platforms, when there's volume going on there, will increase volume for us with the cross flow of assets. So it's going to replicate, in my opinion, something like the financial system of whatever country you live in, where banks are constantly doing business back and forth, except in this case, the DeFi platforms are doing transactions back and forth. So there'll be a lot of opportunities there as well on the cross flow side, the enterprise side. One of the things that we are really exploring right now as well is institutional involvement. So we really want institutions to get excited about coming into Cosmos. So it's not just the centralized exchange user, but the institutions who also primarily find themselves only being able to deal with centralized exchanges. So this is actually a good opportunity to attract them as well.
I think we chatted a little bit about this offline once, but it's the same problem that everybody has with connecting with multiple chains that IBC can help with. In the end, every net new protocol, every net new asset, let's say RWAs, whether they are issued in Provenance or Mantra or any other layer, it's yet another thing that anybody that wants to access them needs to connect to or integrate. So I hear from you like trying to build that distribution layer, right? Where it's like, hey, instead of having to create a new integration, try to broker your deals, just go to Elys, and Elys will have an aggregated suite for all of these different properties. Is that more or less where your mind is going with B2?
It's potentially an option. I think we will rely on partners for a lot of the integration. So for example, Skip.go, right, and Interchain Labs. I mean, they do a lot of great work. We work with Agoric to do some of their API orchestration. We'll have a lot of different partners that actually kind of make the behind the scenes actions work. And then we'll have the front end that allows the user to essentially access all those things. So we don't necessarily have to build it. If it already exists in a place that's doing it really, really well, we'll just directly integrate it into Elys. So it's one of the things that we are very flexible and open to is not trying to reinvent the wheel, not trying to build something that's already been built, but rather like put all those pieces together. And where somebody does something a lot better than us, we absolutely want to send the user to that place to be able to conduct that business, but in a way that has a seamless UX, right? A user experience. So if they feel like they can do it from the app without having to switch wallets, switch apps to go to the next place, but we can do it for them and get the same thing done for them. It's beneficial for everybody. It's beneficial for us. It's beneficial for that other chain that might be providing that service, and it's beneficial for the user because they're feeling productive. So all those things I think are very top of mind for when you think about, okay, how do we get user acquisition and user retention? User experience is really one of the big ones there.
Awesome. Yeah, and I'm curious generally, like, what is the kind of like the latest exciting news with Elys? Can you maybe, like, this might be a good time to maybe kind of walk us through Elys's sort of core features and some of the things that people have been really excited about lately using Elys?
Yeah, absolutely. So Elys has been on an aggressive launch schedule. So we launched in December, and we keep rolling out new features as we go through audits and as we go through like full testing, et cetera. So recently, one of the big things that we launched was our vaults, and I'll go into that here shortly. But when we had our swaps enabled and our liquidity pools enabled, our main differentiator has been the smart shielded pool design. And I can jump into that as well. So smart shielded pools, vaults, and then a new iteration of vaults that's going to be coming called AI vaults, algorithmic and AI vaults, which are going to be pretty exciting. I'll share a little bit more there. And then perpetual trading. So quite a bit coming up in a very short amount of time. In fact, we have our whitelist of about 60 users for our perpetual trading that should launch next week. And that's going to be pretty exciting for us in terms of just being able to do the proof of concept side of things. So with that, I'll go back to smart shielded pools. Should I do a screen share here? Maybe I can jump on and kind of demo the app a little bit and dive into it, maybe with a little visual.
Yeah, that would be
amazing.
Let's take a look here. All right. Okay. So here we are at the dashboard for Elys Network. For those of you who have not visited the app, it's app.elys.network. When you connect to this site, you will have the option to log in with your traditional methods of, like, let's say Kepler wallet or Leap wallet, etc. In this case, in this demonstration, I'm using a Google login. So this is just a demonstration wallet here. But with that option, it's really great. We use our partners at Web3 Auth to allow a user to have a very seamless connection option without having to store their seed phrase. And then they're able to essentially just log in from any device without having to, transport the keys, so to speak. So it's actually a really great feature for somebody who's starting out in the space. And one of our strategies for bringing a new user into the space who's maybe coming to check it out from a centralized exchange is to be able to just log in with a social account. And then maybe when they get a little bit more experience and maybe get a little bit more comfortable, they can move on to a ledger wallet or some sort of other wallet that they can safeguard their own keys. And then they could use this as like a hot trading wallet or something where they keep a small amount of funds on. And when they're done, they can move it over to a ledger. So a lot of different strategies. It's really up to people, different people's tolerances, risk tolerances, but again, we bring this option to the users so that they can have that quick access experience. And so with that said, oh, good.
Oh yeah, sorry. I'm just going to say it kind of goes back to that, what you guys were saying about trying to onboard all of these centralized exchange users, because these, a lot of these users have never used a wallet before. They don't understand the concept of self-custody. So just being able to kind of mirror that, like, oh, I can just plug in my email, for example, and log in and start using Elys, I think is a really interesting.
Yeah, it's still way more accessible than centralized exchanges. Like, we might say, like, oh, they have similar logins or they have social logins. But regionally accessing like a centralized exchange, it's, sometimes a pain in the ass. I'm even, from Argentina, and up until like 2 years ago, we couldn't use something properly without getting blocked instantly, like regionally or through the KYC just being a shit show. So having alternatives on the decentralized space goes a long way, especially when, we go back to that idea of banking the unbanked.
Absolutely. And no KYC, quick access. All you have to do is essentially just transfer funds in, which is probably going to be the biggest challenge for a brand new user. But we will be able to walk users through some of those steps. So for example, here on this dashboard, on the transfer button, if you are brand new and your balance is 0 and you just logged in, you just created your wallet for the first time, you could do the deposit crypto or the buy crypto options. So the buy crypto options right now, we've integrated the fiat on-ramps from Coinbase or Cato. We wanted to have at least 2 so that there was at least 1 available to you in your country. So Coinbase is a pretty good one for someone like me because it's no fee. So you can usually bring on your USDC from Coinbase without paying anything, which is nice. Cato does charge a fee. And then if you already had crypto from another chain, we've integrated the skip.go widget. So if you have, let's say I have some USDC on Noble, I could actually just, I'll just demo here. I just bring like $100, 100 USDC in, I hit send, I confirm, and it's on its way. So it's pretty cool to have this this optionality to give the flexibility to the user to have the funds come any way they want. So with that said, back to the dashboard, we really wanted to replicate like a really clean, elegant design where a user who maybe interacts with their financial institution, their banking products, whatever it is, their brokerage, they like a bird's eye view. They like to be able to see everything that's going on without having to jump to 10 different places to see it. So here we give you all of that information, right? We give you your portfolio information, the breakdown. We give you total balance. We give you the rewards based on whether you're providing liquidity or staking, or in the vaults, we give you the rewards display, and then we give you an easy access to claim them all. So if you wanted to claim them, you could actually claim everything in one shot. This membership tier, I'll touch on just for a little bit because I think it's really cool. We did a lot of research on, hotel, airline loyalty programs and credit card loyalty programs, and we found that these programs by themselves, for some of these larger companies like American Express or United Airlines, et cetera, they're worth billions of dollars. And the reason is because they are exceptional user retention strategies, right? Customer retention strategies. So, and the customer feels really, really great about having some sort of benefit to be in one of these tiers. So we created a tier program at Elys Network. It's automated on chain. So it just looks at your assets over the past 7 days. So in this case, with this demo wallet, I'm a silver member. And one of the great things about this is I get discounted swap fees. When I go to make a swap on Elys, I actually get a slight discount on the fee. And in the future, when we roll out our AI trading tools and our subscription services for some of the AI stuff we'll be offering, tiered members will get those for free. So it's pretty exciting for us to have that. Otherwise, if you're a basic member or a low tier member, you might be charged, let's say $4.99 a month or $9.99 a month if you want access to these specific tools. So with all that said, scrolling down here, you have your view of all your individual assets. So here's my liquid assets, just have some small token amounts in here. Then I have my staked assets, which would be my Elys and Eden staking, which we can jump into. Vault assets. So this is individual tokens right now that are deposited into a vault that earn a yield because they are used for lending for leverage LP. Liquidity positions. So this is providing liquidity. And then leverage LP and perpetual, which I do not have access to because I'm not in the United States. So I don't have, or I live in the United States. So I don't have these two as an option to me. But if your jurisdiction allows it, you can enter leverage LP. And soon when we launch perpetuals, you'll have that option. So let's go into, we'll skip the staking. I'll assume for the purposes of this discussion, I think most people in the Cosmos ecosystem probably have an idea of how staking works. We can come back to it later if you want, but I think the liquidity mining is probably going to be like a little bit more interesting because it's a little bit unique in what we do. So in this case, this is where we can kind of showcase our smart shielded pool design. So every liquidity pool that we have on Elys, with the exception of our own token, is a smart shielded pool. So you can see Elys USDC is a basic pool and the rest are smart shielded pool. So what does that mean? This means that we use market pricing that comes from an oracle. So we feed pricing data from large verified sources like Binance, for example. We aggregate that source data and we feed it per block into the chain. So when somebody is executing a swap, they're getting the price of that token real time from the market. And with that, when the swap is executed, the balance of the pool itself will actually move off of 50-50. So this is very different than, let's say, something like a Uniswap style pool, where every time a user places a trade or a swap on Uniswap, they are actually putting tokens into that pool and taking tokens out, and the automated market maker feature of that pool will just rebalance that pool to 50-50 as soon as that swap is executed. What that does is for those Uniswap pools is it changes the price of the token temporarily until another trader comes in and takes a trade on the other side of that to bring the pool back into balance. So as you guys are aware, if you've done this before, that's where you start to see things like slippage and price impact, right? Because you're going to see if the price is off by a certain amount, you're going to get worse and worse slippage. Or if you're the trader bringing it back into the other side, you can actually make a little bit on that spread by buying a token somewhere else at the market price and then being able to or selling a token, buying it at the lower price, for example, at the Uniswap pool, and then going in to sell it somewhere else, right? Somewhere else. So that's kind of how arbitrage traders do their business. In our case, since we allow the pool to move off of 50-50, because we always keep the tokens tied to the actual market price, the price of the token does not change, right? It only just reflects current market pricing. The pool balance does change, which then introduces opportunities for liquidity providers and traders to actually balance the pool, bring it back towards 50-50, and then they will get a benefit from doing that using the PBR column that you see here, which is the pool balance reward. And conversely, if you are way out of 50-50, so let's say this Ethereum pool of 35-65, 35% Ethereum, 65% USDC. In this case, we incentivize a user to come in and sell Ethereum into the pool because it brings it closer to 50-50 to the tune of 0.11% pool balance reward. But if somebody were to come in here and try to buy Ethereum out of this pool, it would be an expensive trade for them, right? They would have higher slippage, higher price impact, pay a larger fee to the liquidity provider. And therefore, we want to discourage somebody from buying USDC here. So it's a self-correcting system. And the great part about all this is the slippage and fees go to the liquidity provider rather than the arbitrage trader, as opposed to the Uniswap style pools where the slippage goes to the actual arbitrage trader. So that's how we keep the pool sustainable. So far, our liquidity providers are doing exceptionally well. They're not getting any kind of erosion from their pools, relative to like a Uniswap, for example. And they're able to sustain in here. They're able to earn really great APRs. Right now, we're doing a bootstrapping APR. So right now we have an Eden, which is our secondary reward token, our inflationary reward token that you can convert to Elys over a 90-day period. But most of the excitement that I think you see is like when a pool has very high volume, you'll start to see the USDC numbers go way up. So in this case, let's say, for example, Zion is very heavily traded. So you can see USDC fees, 4.77% APR, price impact 37.65%. Very heavily traded pool. And it's very exciting for the people providing liquidity in this pool because they're earning these fees in USDC and they can actually see this accrue over time in their rewards section on their dashboard. So that's the explanation of the smart shielded pools. It's been a really, really like well-received design. People are taking notice of it. We're talking to institutions right now to essentially have them provide liquidity. We're very excited ever since we enabled IBC Eureka, thanks to our friends at ICL. We have our biggest pools here, obviously, are the Bitcoin pool, and it generates a lot of excitement because one, low fee trading relative to people trading Bitcoin on Ethereum networks or any of the higher gas fee networks. But two, they're taking advantage as liquidity providers of this smart shielded pool design.
Yeah, and one interesting thing I think for this is also like trade execution pricing that I don't think we've touched on as part of this yet. I've seen very often going to like, to skip go or, like in Kepler's in-wallet swaps or doing, kind of anything that requires aggregation. You actually see Elys beating out some of the bigger guys on trade execution like Osmosis and Neutron. And it has a lot to do with the smart shielded pool design, right? Like in this case, I would assume the pool balance reward is actually subsidizing a lot of the swap fees that traders are paying. So you actually end up getting way better execution on Elys versus elsewhere.
That has been our observation. So recently we got connected to skip.go. Our DEX was integrated in skip.go, which allowed us to be included among the list of Osmosis, Neutron, Injective, any of the other trading platforms that are included on skip.go. And we're finding that essentially about 40% of the time, 40 to 50% of the time, Elys swaps are outperforming those other pools. And it's pretty amazing, even with the Atom pool. So when you go back and take a look at the size of our Atom pool, it's only about $730,000. There's other pools out there that are, you know, $2 million, $3 million, $5 million. So how is it that our pool with lower liquidity is able to outperform those pools on swaps? It's just like you said, our smart shielded pool design. And this is why we believe we have the answer to fragmented liquidity, right? We understand that, you know, that this is like a commonly mentioned, you know, barrier to entry in DeFi, but we've solved it, right? And I think that's really important, because I personally don't see fragmented liquidity as the problem anymore. I see it as more of the user understanding the user experience, the user, you know, ease of access kind of thing is really the barrier to entry. The fragmented liquidity we can solve on the back end, and we have, right? And other people are doing it as well. And so it's okay for us to have like an Atom pool that's only $700,000, and it's okay for another platform to have an Atom pool that's, you know, 2 million, another place that has 100,000. It won't matter as long as the assets can flow freely across chains, and then the user gets the benefit of that healthy market dynamic of like liquidity balancing itself out. So we're not trying to do winner take all.
It goes a little bit back to access, right? Like if you just have smart liquidity, which is just smart, well executed liquidity that adapts well for these pools, new tokens, new assets that are, you know, just building up, let's say, the arcs of liquidity that are available for provisioning, or, you know, the confidence, let's say, of people providing liquidity isn't a barrier for them to actually, you know, be available on platforms like Elys, or in general be accessible to the people that want to use them or want to access them for trading or whatever use case the token provides, right? Before it was like it still is a constant battle of like, you know, we'll need to work with market makers here, we'll need to help provision liquidity there, but solving this problem little by little of efficiency matters a lot, because it continues to widen the range of options and the type of assets that, you know, people can use. So it's really cool to see live and working.
Absolutely. No, and I agree. And I think what's going to be really exciting to see in the future is how every team and how every chain tackles this from their unique perspective, because they shouldn't all look the same. You know, I think that it's like, for example, like where I live in the United States, you know, maybe being a customer of JP Morgan Chase and a customer of Citibank as a customer of Bank of America, sometimes people have bank accounts across multiple banks, and you'll see that their experiences are slightly different with each bank, and they're okay with that. And there's some things that they like about one platform that they use versus another. Maybe they like to use the high yield savings account in one bank, but they like to use the checking account of another. And that's okay, right? And those are the types of things that I get excited about, because in that environment, JP Morgan is not mad at Bank of America, and Bank of America is not mad at Wells Fargo, and Wells Fargo is not mad at Citibank, right? They all do great business together. They often come together all the time. They sell loans to each other. They do all sorts of things together. So that's how I see the future. When we're all kind of maturing, a lot of the DeFi platforms will actually come together and probably do some sort of council or do some sort of committee where they sit down and basically talk about, okay, how can we support you? How can you support us? We can send our lending. Okay, we got a bunch of users that would really love to do lending. Okay, you guys are the best at lending. We'll send them to you for lending, right? Or, oh, you guys have the best swaps. We'll send them to you for swaps. You guys have the best perps. We'll send them to you for perps, right? And so that's where I see this going. So everything shouldn't just be copy paste. It shouldn't be something like, oh, they have a good design, let's just use theirs. No, you know, let's try to have like unique aspects of each platform where we excel at something, and then leverage the very best of like what somebody else is doing.
And we've seen that, you know, be connected in Web3 very not like at the surface level in many ways, like from referral front-end fees, depending on the protocols that, you know, an app integrates. There's so many dynamics that you can create that are just like net positive for protocols to be just working together.
Absolutely.
Yeah, so it's super exciting. Let me pull you back a little, maybe, on something I think you flew by quite casually, and I think we want to dive a little bit deeper on, which is AI vaults, and how are you guys integrating AI into vaults and using models themselves?
Okay, this one is very exciting. Please forgive me as I am going to give you mock-ups because they're still in the design phase. So
Capital.
This is from the secret. This is from the secret archive. So these have never seen the light of day before. So
you heard it here first, folks.
You heard it here first. I'm gonna get yelled at for this later, but whatever. So anyway, so this is the next iteration of our vault. So actually, what I'll do first is let me jump back to our current offerings of vaults. So if you are familiar with how our vaults work or not, just quickly touch on that, which is they're single asset deposit pools where a user can deposit their whatever token that is available. So Atom, USDC, ETH, for example, all the way down this whole list. You deposit your token in there, and then the user can borrow from that vault to enter a leverage LP position. While they're doing that, they have to pay interest. So the base interest rate is 12%. So, and then it starts to go up based on how much is consumed. So in this case, the Atom borrow rate is 14%, Ethereum borrow rate 12.19%. So you can see that Bitcoin is very heavily borrowed. So the interest rate is 27%. This is really great for us, right? And it's really great for somebody who's participating in a vault, because what ends up happening is the interest is paid back to you in that token. So if you have a vault and you've deposited Bitcoin in your vault, you're earning 18% on your Bitcoin right now. And that's not a gimmick. That's actual people borrowing Bitcoin from you and paying you back in Bitcoin when they get liquidated, while they have the position open, etc. And then you still earn your USDC fees from system rewards. You still earn your Eden as a bootstrapping, etc. So this is a really exciting vault. I'm personally in these vaults. So I'm personally in Pax Gold. And again, in this demo wallet, I'm in a little bit of Bitcoin. I'm in a little bit of Injective. I actually did this, I put this Injective on a couple of days ago, and it's been doing quite well. The thing that I get excited about is watching my balances grow. So when I started this Bitcoin vault, I had 0.0155 Bitcoin in there. And now I have 0.0157 Bitcoin in there. And I didn't have to do anything. So I'm growing my Bitcoin balance, and I didn't do anything. People are borrowing from me, and they're paying me, which is pretty amazing, right? Peer-to-peer lending is a real thing. And oh, by the way, this is why centralized exchanges make so much money, is they take that money and keep it for themselves. We don't, right? This is a peer-to-peer platform. So if you're a user providing liquidity or providing the lending through the vaults, the money goes to, the rewards go to you. So that's the beauty of it, right? Is we unlock the financial access, the financial benefits for each individual user who wants to participate. So with that said, that's the vault's very basic system in terms of how it works, but we're kicking it up a notch. We're taking it to the next level. It's not just going to be one asset inside a vault. We're now going to give you the option to put multiple assets inside a vault, and they'll have different strategies and risk levels. So in this mock-up right here, you can see that, for example, there's going to be like a delta neutral staking vault where you can deposit an asset in there, and it's essentially a hedged position. So it'll have a low risk, low return type performance for you. So it'll act like a yield bearing stable, for example. There's an LP rebalance vault concept, an arbitrage vault concept. That one will be anytime it can identify an opportunity to go and arb. So like, let's say the pool balance reward concepts, where it can go and arb a pool and balance it. It'll take advantage of that and then put the gains back into this vault. A multi-token vault, which this has been on our list since the very beginning, since like the white paper days for us. Having multiple tokens in the same place where you can have market exposures kind of give you more like that ETF style, risk tolerance is something that people have been asking for a very long time. And it was always a little bit technology limited, a little bit, front end limited, so to speak. And we have been heavily testing that and heavily going through ways to make this very, very efficient and make it like reasonably robust. So this is the one we're really excited to launch. So for example, you could just throw in this case, in this example, it's like deposit asset injected, but let's say it was USDC. You could put 1,000 USDC in, and it'll automatically deploy it to 85% Bitcoin, 7% Ethereum, and then the rest of the USDC, for example, right? Just making the numbers up. But you'll know when you actually go in and check out the vault, it'll tell you what the distribution within the vault is. Like if you enter this vault, this is the exact amount of Bitcoin, Ethereum, USDC. If it's a fixed balance vault, if it's a variable, it'll tell you it's variable. It'll give you the risk level. It'll give you the current yield that it's giving you in APR, and it'll give you a lot of information. And most importantly, we'll also cap the amount that can go into the vault. And that's actually different than our current vaults, because our current vaults do not have a cap. You can just have as many people as you want come in. In this case, these will be capped at a certain amount based on the person who is curating the vault. They'll say, I only want this vault to have $1 million in it, or I only want to have 200,000 in it. And that's really important for rewards distribution, because it can get too diluted if there's too many people in it. So that's the example there. Again, we try to go various risk levels here in this example, like treasuries versus like stocks, right? The stocks are going to be a lot more volatile than the treasuries, but it'll give something for everybody, and it kind of puts it on autopilot for you. Now, the reason these are AI vaults is because we're going to use AI. AI is going to feed the information in to determine, like, for example, the rebalancing strategies, or it's going to determine the allocation strategies. And then we'll be able to communicate that to the user on how AI is being used for those. Let me take a look at some of these other.
You said to maybe really quickly, like at one point, like the people curating the vaults, how do you see that process scaling and with AI vaults, and what can people expect in terms of creating their own vault or proposing new vaults to others?
So we envision this to be permissionless. So anybody who wants to curate a vault can come in and curate it. And of course, not all vaults are going to be created equal. So the important thing for us is we want to partner with very successful money managers out there. So one of the things we're doing right now is talking to financial institutions and actually seeking out professional money managers who already have a proven track record. So this is really exciting, because from our level, at the founder level, Prashant has 20 years of deep trading experience with Credit Suisse and Mitsubishi Financial. So he's basically tapping his contact list to be able to go find the best money managers and essentially say, hey, we'd like for you to curate one of the vaults. Like, you have tremendous experience with treasuries. Why don't you curate our treasury vault? Why don't you curate the stock vault? Why don't you curate this vault, right? So we're looking for people who have a proven track record to be the kind of initial curators. And then the ones that are kind of done through AI strategies will be advertised as such, right? The AI ones will be like, this one is using the AI, the information that comes from the specific, like, let's say, large language model. So right now we're talking like fetch.ai, so ASI. They're kind of one of our partners right now that's going to be helping us with maybe sourcing that data. But that's going to be really exciting for the user, that they're going to be able to see the name or see the person or entity that's managing their vault. So then that gives them a little bit of idea on how to do their due diligence and say, yes, I trust this person. I would like to enter the vault with this person because I know their track record. Or no, I don't know who this person is. They're not somebody I'm familiar with. Their performance is pretty bad. The APR is 0 and it's losing money. I'm not going to jump into this vault. So that's the beauty of it, right? We want people to have the freedom of choice, and we want people to have the information at their fingertips.
It's super exciting. It's sorry, dive in, bro.
Oh yeah, I agree. It's very exciting. This is, I think, a large part of the success of something like a Morpho, where you have these curators that not only have really great experience to be able to provide excellent returns for users, but they also usually have their own contacts of people that are looking for opportunities like this. So it's a way to broaden your own distribution as a company without, you kind of offload that to some of the curators in a sense as well. And it helps you grow.
Absolutely. And that's exactly it. We just want people to have choice, people to have participation, good user experience, right? And continue to really enjoy what they're doing, and then to have it all in one place. So they can jump in the vaults, they can swap, they can perpetual trade, they can leverage LP, they can stake, they can do it all. And then if there's something that we need from our partners, that partner integration will be right on our platform, so they can go off to that other chain. They can go to Stride, they can go to Cosmos Hub, they can go to Injective, they can go to Agoric, get all that stuff done while they're on our platform, but not have to get pulled in so many different directions. So it's pretty exciting. This one is coming soon. We're probably, let's say, 1 to 2 months out from launching it. But I think we'll do the perpetuals. We're going to launch the perpetuals first with the whitelist, and then go into these. It's
super, super exciting. And it's also the way the system, is built. As you say, you're aiming for permissionless, already knowing like the strategies, who is building and curating the vaults, even the systems that you're using or the models you're using for the AI vaults. It's such a jump from just any traditional banking experience, where the equivalent of this, my day-to-day life, let's say 10 years ago, is entering my banking app, looking at the equivalent of US Treasury stock fund number 4, and then praying that whoever is behind that desk at JB today woke up in a good mood, and is managing that little fund correctly. This is the contrast they get here with platforms, as you say, like Morpho, Elys, pushing this into new, more transparent directions, where at least you take known risk. You can make your decisions with the actual amount of information that you need to do them.
Yeah, absolutely. And thank you to Maxime for putting on this Vaults screen share, because I think it's better than the one I had. So if
we went from Google Docs to the full on
yeah,
amazing.
See, because I just had my own personal copy of it, and I was like, I'm just gonna send it. So yeah, it's always good to have a guy in the background, doing this stuff for you. Let's see.
There's always
exactly. So the AI vaults, I think, is going to be super exciting for us. I think the beauty of this is when we started, ideating Elys Network, a lot has changed, but the concept is the same, right? The users want opportunities to earn yield. They want a place that they can deem as within their risk tolerance. Like if they deem it to be safe based on their risk tolerance, or they're willing to handle certain levels of volatility, they want an option to go in on that, right? And so this has always been the thing that we've watched centralized exchanges just dominate in terms of, they capture the users' eyeballs, they capture the users' attention and their funds, and it stays there. It doesn't leave, and that's really phenomenal to see what they've done. They've absolutely just hit a home run with that. And the worst part about that, and it kind of makes me, it frustrates me a little bit, because I still see so many of my colleagues doing this. I'm going to go to the swap page real quick, so I'll share this one. And you guys have all seen this, because I'm sure you've shared the same frustration as me. Is this is I'm not going to actually execute the swap, because I'd have to pull USDC out of the vault. But let's say this swap right here, where I'm looking to swap 1,000 USDC for Bitcoin. Right, you can see that I'm going to get $998, and 22 cents. So I'm going to get, it's going to cost me essentially all in. So after fees and slippage, right? Fees are pretty minimal, and gas fee, I'm going to basically pay about $1.70 for this swap. As you all know, if you try to do this on Coinbase, or if you try to do this on Kraken or wherever, you're going to pay at least $25 for this trade, $20 to $25 for this trade. Even if you're like a premium member and you have the no fee trading concept, or whatever they're calling it, your net output is still gonna be about $25 less than what you're getting here, $20 to $25. And that's just, I cannot believe people do this, right? I cannot believe people go in there, sell $1,000 worth of something to get $980, $975. That's just really it's unfair, right? The problem is the average user doesn't really know that there's a better opportunity out there for them to be like, wait, I don't have to do that. I can go on Elys Network, I can go on Stride Swap, I can go somewhere else and get a better trade. I don't have to give this centralized exchange $25 for something that should have cost me $1. And so this is a real problem. It's a real problem, and it needs to get fixed yesterday. And this is what we're trying to do, right? Because there's so many people just throwing their money wildly at these centralized exchanges. They're just printing money. They're just making so much money off of this. So I wanted to highlight that, because it's very near and dear to my heart. It really pains me to see people just lose money like this. So again, that's more of the altruistic side of me, just wanting to see people just have a better opportunity at making gains on their trade.
Yeah, and if you want to make it actually feasible globally, you gotta be able to charge global, rates and fees, things that were, $25 hit harder in different parts of the world. So the better we can optimize that. There's fees elsewhere. There's a lot of other mechanics across platforms where fees can be earned, and punishing users in that front is definitely not something that helps with onboarding anybody.
I absolutely agree. Absolutely agree. And I'll just demo this. I'm just blindly demoing this. So let's see, Ethereum. So in this case, we want users to sell their Ethereum on the platform, right? So if you were to come in and sell, so this is the beauty of the smart shielded pool design. If you want to sell one Ethereum, because we're so low on Ethereum on the balance, 3565 roughly, whatever the number was, you can see that if I sell one Ethereum right now, I'm actually going to get more than one Ethereum's worth. So this is the pool balance reward in action, right? So I'm selling $28.30 to $2,830 worth of Ethereum to get 28.32 USDC. And you can see the pool balance reward there is 0.14%. So that's why this design works. It's a really fantastic design in terms of bringing the pool into balance. And more importantly, the price impact, the slippage goes to the liquidity provider. So they can continue to sustain, continue to do well in the pool, continue to watch their gains go up. You know, if as long as the prices, of course, don't crush them or things like that. And by the way, 2,800. Did we just have a breakout in Ethereum as we were doing the show? Like, when did this happen? I could have sworn, I could have sworn it was like 2,500 yesterday. Anyway, that's wild. Okay, great. Yeah. So again, I wanted to highlight that too on why this trade works. Because if you tried to put this trade on Coinbase, you're gonna put a trade on for one Ethereum, 28.25. You're gonna get something like 27.95 back, right? You're gonna get crushed. You're gonna get absolutely destroyed. So, you know, I just it's just, people don't deserve that. They deserve a lot better than that.
No, you put it to work in a different purpose, and you solve one problem for the other, which is amazing. We got, let's say, a couple minutes left.
Okay.
So why don't we close it with the last thing on your roadmap, which we know is coming in the, when we publish this next week. PerpDEX. You want to run us through what the PerpDEX will be in Elys?
All right, let's do it. So for this one, since it's not live, I'm going to switch to our testnet. So here is testnet. Let me go to perpetual. All right, so we are on our perpetual page at testnet. This, you can see right off the bat, things get significantly more technical, more advanced. So for this one, we give you the trading view advanced charts, which, by the way, we have a lot of users that have asked, hey, can you do the trading view charts on the regular swap page as well? So we're talking about that right now, which I think would be a really great tool. Forgive me because I don't know. I'm not a chartist. I don't know how to draw lines. I don't know where they're supposed to go, but they look fun, right? It looks pretty fun being able to.
There is a smiley face on the selection tool. I see it. Happy charts.
I just drew a line, so I don't know. See, I'm not. So I am the kind of person. Yeah, I can tell you right now, this is why I don't trade, and I only buy and hold, is because this type of stuff is way over my head. But although the people who are exceptionally good at this, they're going to love these tools, right? They're going to love having this opportunity. So for perpetual traders, again, it's a very specific group of users who understand the risks of taking on leverage. You can go up to 25 times leverage for when this goes live on Elys. We have an initial whitelist of 60 users, and we're targeting next week for this launch. So it's happening very, very quickly. So in this screen, you can see I have the option to long or short some of these assets. Oh, you're not supposed to see Ripple? No, I'm just kidding. We are working on Ripple right now. And so you have the long or short option. In this case, I'll demonstrate a long. And I have, let's say I want a long 100 Atom. And I want to, let's just go for it. Let's just go for 25 times leverage. And in this case, I can set my take profit and I can set my stop loss. So let's do, if the current price is 453, let's go with, let's go with 483. I'm feeling bullish, and then the stop loss. So if I don't have a stop loss set, then all I'm doing is risking myself for liquidation. Liquidation would occur at 448. So on stop loss, I'm going to go here and maybe just set it somewhere a little bit higher. Let's say I'm really skittish and I don't want this thing to run away from me. I don't want to take a big loss. I'll set it at like 450-ish right there. And that way I've defined my risk, right? I've defined my max gain and my max loss, and I'm happy with that. I'm not going to get liquidated. Instead, I'll just eat the loss if the trade goes against me, live to fight another day. And then I can go ahead and open the order. So again, you can go a little bit deeper. You can go into market versus limit. You can do a lot of other things you can do. You can expand your order details to take a look at all these other features that, or the specifics of what's going on in your trade. And then you can view it under your open positions. So this is one I took a little bit earlier before we started, but I don't have any pending orders because I don't have a limit order in. And then eventually this will update to add the second order for me. Let's see, should we dig into any other specific areas or anything that you guys want to ask about perpetuals? I think, again, this is a very advanced feature. Most users definitely do not perpetual trade, and that's good, right? I think this is one of those things where if you know what you're doing, it would give you just enough to be able to choose your destiny, right? Like if you want to take the conservative option, just only stake, that's perfectly fine. And if you want to go very, very aggressive and you want to do perpetual trading, the only thing that I ask is that just be very careful because if it goes against you and you put too much risk on, if you put too much of your portfolio on a perpetual trade, you don't get to live to fight another day. So my understanding is somebody who perpetual trades will never trade with more than, let's say, 0.5% to 1% of their portfolio ever, right? And I think that's probably a smart thing to do so that you don't ever regret going in on a trade that goes against you.
Yeah, and I do have actually a question about this and maybe how it kind of ties into the broader product. It's surrounding liquidation. So if you do, end up getting a liquidation or two on the perpetuals DEX, do those route through the existing smart shielded pools on Elys?
They do. So that's actually another great benefit of the smart shielded pool design is they are the engine for perpetual trading. There, of course, is going to be a limit on how much of that pool can be used for perpetual trading. So right now, because it is also the engine for our swaps, of course. So in that case, we want to make sure that so much of the pool isn't subject to perpetual trading that a swap can't get executed, for example. So we do limit the amount that can be used, and that always protects the liquidity providers. Now that once it is fully borrowed, so to speak, or fully allocated, then a new user can't really open up a perpetual position until then someone else is out of their position, closes their position. So yeah, liquidations go back to the smart shielded pool and essentially add towards that the gains for the liquidity provider.
Right, which creates sort of a flywheel in and of itself, right? Is you get these kind of fees now going back to your LPs should help grow liquidity in the pool, which means you can increase the cap rates on the perps and kind of just sort of generate this very positive flywheel of growth.
That's exactly right. The flywheel concept is very real, and it's one of those things where we want people to have comfort in being able to sustain in some activity that they're participating in, whether it be the smart shielded pools providing liquidity, whether it be the vaults, whether it be staking. Even if you're staking, remember, as on Elys, you get 25% of overall system fees collected, which is pretty cool. So even from the fees that are collected from all these other activities, you can actually still have exposure to that just by staking Elys, which is pretty awesome. And the same thing with Eden, right? So if you were to go and claim your Eden and restake your Eden rather than vest it, your Eden is earning the same rewards, the same staking rewards as Elys, because Eden is a 1-for-1 representation of Elys. When you vest it over 90 days and then you redeem it and it turns into Elys. There will only ever be a total of 50 million Eden ever minted. And then once that last Eden is minted and converts to Elys, there's not going to be any more Eden. Eden will disappear from the system entirely, which is the whole point. So
amazing. Let's do a quick recap because before we call it, Hesham, thank you so much. By the way, this has been amazing first, to get fully onboarded to Elys through the other features that maybe I haven't been tweaking with yet. And for folks also to see what's coming up. Thank you for testing this with us as well, and for bringing some good mockups of what's next as well. We're super excited. Could you do a quick recap? What's next? When it's coming? What to expect?
Absolutely, yeah. Thank you, Nico. Thank you, Robo. I've absolutely enjoyed this. I hope we get to do it again soon. This chatting with you guys is one of my favorite things to do. It's just high energy. It's super exciting. I love like sharing new information with users, and what better place to do it than with you guys. So to wrap it all up, Elys Network is really trying to take the very best that you can get from a centralized exchange and put it right in your hands, give you the self-custody, give the reward opportunities directly at the peer-to-peer level rather than it going to a centralized source. So in this case, that's staking, that's swaps, liquidity provision, leverage LP, perpetual trading, vaults, single asset, as well as the AI vaults that are being rolling out soon. Soon we'll have perpetual trading next week, but also real world assets and then prediction markets as well. So a lot coming. We're very excited about the integrations with our partners. So a big shout out to Interchain Labs. I always got to mention Mag, you know, and the leadership that he is just displaying out there, which is really instilling confidence and getting like institutional attention. And you know, I know you guys have a very strong relationship with ICL. I'm super excited to see what Stride's going to be doing there. So I mean, how can you not be bullish? How can you not be excited about everything that's being built right now? You know, putting the plumbing in place, putting the roads and bridges in place, and then now it's just up to execution, up to making sure we're staying in touch with what users want and need, and then you know, cycling in that feedback as it comes in, and it constantly iterating, constantly improving. The customer is always right. The user is always right. We're there for them. And I know you guys are too. So this is where we're going. I'm super excited to do this journey with you guys.
Super excited.
Likewise. Absolutely.
And for you, Robo, like this is practically a thing that I think, you know, we continuously do internally a lot, which is with Stride and other teams, we end up just like showcasing the different new things we're working together, trying to see where there's opportunities. And that's one of the things that has been happening a lot, right? Like for you, Hesham, as well, with Elys and other teams, you know, in the ecosystem, not just Stride or XRP and things that are coming. But this like ability to just a little bit more open bridges, as you say, to say like, hey, this is what we're up to. Does this overlap in any interesting way? It already changed a lot the dynamic of what we're doing here. So it's just doing that in public, I guess, now with this, which is very fun. It also gets us thinking as well, which is very useful. So I really appreciate it. Really appreciate you, Robo, as well. Thank you all for writing on this with us. And on to the next one. We'll be tuned for the PerpDEX and the releases.
Absolutely. Thank you guys. Really appreciate it. We'll see you guys in the next one.
Thank you both.